we're expecting S&P lower until December 18. The next move is part of a larger correction that will continue until late January. However, the first leg down has already begun, and it is likely to continue, and it may not be dramatic. It may actually have another high around the 13th of December before going down to the 18th. After that low in mid-December, third week of December, we're expecting a year-end rally, at least until early January. Once that high comes in early January, which possibly could be a new high, we'd see a larger correction in January that would take us down to the third week or the fourth week of January. So this correction starting in December, pulling back to the 18th, up to January 4th or 5th, down till January 21st or even as late as the 31st. And that's kind of all the correcting we're going to get done. Now, price-wise, we don't think it'll be very dramatic. We're thinking 4,300 on the S&P is probably a strong support level, and it's not likely to go much lower than that. And then after the decline that ends in January, we're expecting a very strong rally to go up all the way into April. Okay, so we're expecting new highs in the S&P, certainly by April, possibly even by early January. If the correction has an irregular type B wave in the middle of it, it could actually go up higher before it closes. So this is not an easy opportunity for shorting the market. It probably will go down. It will be lower by the mid to late January, but to short it may be difficult because it could chop around and have some intermediary highs in the middle that make it difficult for the shorts. Now, we have a 7.5 month cycle. It's been working rather dramatically well. And if it continues, it shows that market really doesn't do a whole lot of damage on the downside, but it does correct until January. And then it rallies much further. We also have other cycles, which we've shown before, the 98-week cycle, and also the 1 year cycle tends to alternate. In other words, the highs and lows tend to alternate. So the highs of last year tend to be more or less in the low area time-wise this year, and vice versa. And 2 years ago tends to be similar to this year. So if you look right now, it turns out that there's a little bit more potential strength that could come in based on the 2-year pattern going up until the end of the month, and the 98-week cycle going down until late January. So they're fighting each other. So it's not a dramatic thing. However, the 98-week cycle, if you look back over 90 years of data, in all the times that the market has been in an uptrend, we looked, and it turns out that 35 out of 41 times, you had at least a 2 to 3 week correction based on that 98-week pattern, which is ultimately based on the position of Mars. The position of Mars right now in Vedic astrology is in the late part of Scorpio, which happens to be reliably bearish for the market, for the stock market. But there are other cycles that are not bearish, and so they're going to fight each other, creating perhaps a more muted decline. But that means that this market's pretty strong, and if the correction isn't very dramatic and doesn't break 4,300 or 4,200 at worst by the late January, the next high could be way higher. Okay, we could go up to 52 or 5,300 by April. And it's even possible to see the 4,800 level reached between now and the 13th of December if this decline kind of has a little decline and then one big up day around the 12th or 13th, followed by a sharp breakdown to the 18th. So don't get too comfortable on the short side here, even though a correction is likely, highly probable, but it may not be very severe. Also, it's very important to recognize that once this correction is over, all bets are off. The upside is still very lively until at least the early to mid-April.